Hello, dear students. So now you're going to take up the Indian Partnership Act 1932. This act, when you compare to all the others, is actually considered to be quite simple. So basically, when you look at LLP, you look at partnership, these are some of the acts that you can find them to be simple to understand. Partnership becomes more easy to understand because some parts of it, as accounting, you study in your class 12 also, and you also study in the foundation accountancy syllabus. So because of that, everything here will not be new to you. And this organization as a whole is not new to you. So you'll be able to find it very simple as compared to all the other topics. For your syllabus, you have been given the partnership topic into 3 units. So unit 1 will talk about the basics of partnership, where you'll study what a partnership is. You'll study about the features of the partnership. You'll be then studying about different types of partners. Okay, then you also talk about different type of partnerships. And then you're going to talk about the differences between other organizations like company and partnership, co-ownership and partnership, how it is different. So you'll have a basic discussion like that. And then we'll move on to the unit 2, where we are going to discuss something more in detail, where we talk about one partner, how he's connected with another partner, what relationship partners have amongst themselves, and what relationship partners together have with the third parties. So purely about two relations we discuss. Half of the topic will talk about partners' relation with other partners, that is mutually among themselves. And the next half is going to discuss about partners' relationship with the outsider, that is third party. Okay, so that is also not a very complicated one. It is very simple. Language understood, topic very simple. Then we have the unit 3. In unit 3, we discuss about the birth and the closure of the partnership. So basically, for partnership, you all know very well, registration like companies is not compulsory. Here, if you want to register the partnership, you can register. If you don't want, you have the option. Okay. So here, how if you want to register, how do you register? And why it is recommended that you register. And then, if you want to wind up, okay, if you want to close, dissolve your partnership, then how do you do it? So a very simple discussion is the unit 3. Trust me, unit 1, unit 3 are like very, very simple. With me itself, when you do it, your topic will be done. But yes, little theory is involved in the unit 2, so a little bit more preparation would be required. Okay, so with this backdrop, let us get started with our discussion of the Indian Partnership Act 1932. Just have a recollection to the introductory part which I had given for the Contract Act. I had told that in Contract Act only earlier, we had all the provisions with respect to Sale of Goods Act. We have all the provisions of partnership. Okay, so everything was actually given in the Contract Act. But as in the year 1930, we realized that we required a separate act for sale of goods altogether. Then all the sections from the Contract Act were removed and a separate act was created, which was called as the Sale of Goods Act 1930. So we say everything particularly to sale will be in that act, and something which is not given in Sale of Goods Act, you pick up the general provisions from the Contract Act. On the similar lines, in 1932, there was a need for Partnership Act to be created. More number of partnerships came into picture, so they required a special act governing this kind of business organization. So what they did is, because partnership is also a contract between the partners, it's an agreement between the partners. So what they did, all the provisions in the Indian Contract Act, which were relevant to partnership, that they removed from there and they put it in a separate act called as the Indian Partnership Act 1932. Same thing will apply here also, that if something is not specifically given in the Indian Partnership Act, then obviously that part we taken from general contract. Okay, so that idea will remain the same. So this is the Partnership Act 1932. Okay, so with this backdrop, now let us begin with the unit 1. Then we'll first understand what we exactly mean by the word partnership. Okay, so let's get started. I will share the screen of the Institute study material itself, which we have been using by far, and line by line how we do in the class, I will be covering in the same manner. So you will have absolutely no difference in how the approach to the topic will be. Okay, so let's get started. Okay. So here we have the chapter 4, that is the Indian Partnership Act 1932. Okay. You will see here the unit 1, which will talk about general nature of partnership. Okay. So now let us begin with our discussion. As I told you here, you'll first study about what is partnership. Then you'll study distinction of partnership with other forms of organization. So you will see here, joint stock company is nothing but the company under Companies Act. Correct? Then how is partnership different from a club? How partnership is different from HUF, Hindu Undivided Family? How partnership is different from co-ownership? And how is partnership different from an association? Association means any group of people. How it is different? Okay. Then we discuss types of partners, where we'll have active partners, keeping partner. Okay, then we'll be having nominal partner, partners in profits only, partner by estoppel, which is your favorite. All of that is covered in type of partners. In fact, I would say one more addition has to be there, which is type of partnerships. It's type of partnerships. Okay, that is also covered. Now, moving on further, define the term partnership, partner, firm, and firm name. Now, you have to understand clearly what is partnership. Partnership is basically when two people come together with an intention to carry a business together. And when they carry the business together, they very clearly decide that whatever profit we earn, we are going to share it. So, compulsory aspects are what? To minimum two people, they should come, okay, to form an agreement. Agreement should be what? That we will do business. Okay? And from the business, we are going to share profits. And whether this business is carried by all together or one is going to attend the business and others could be sleeping partner. So all are acting, all are active partners, or any one of them is acting for all. Okay? Your important points that you take home is compulsory minimum two people who agree to come together. So agreement compulsory. It should only be for business. That means charitable organizations and partnership, absolutely no connection. So you can't run business, you can't do partnership on for charity purpose. So NPOs and all will not be in the form of partnership. And in partnership, unlike LLP, where we have all partners being the working partners only, here we say that partners could be what? Sleeping partner also and active partner also. Meaning is sleeping partner is the one who does not come to the office regularly. Active partner manages the business. Correct? But sleeping partner, if he wants any information, wants to know about the business and all, he has all the right to ask for it. So does every time every partner manage the business? No. So one partner also can act for all. Okay? This concept where we say, even if one is acting, all will become responsible. We call it to be mutual agency. We call it to be mutual agency. Okay, now, so you have partnership, you have partner, firm, and firm name. So what is partnership? I told you, it's a relationship between two or more persons who have agreed to run a business. Okay, it's going to be to get the profits of a business, which is carried on by all or any one of them acting for all. So they say it's a relationship between okay, who have agreed to share the profits of a business carried on by all or any one of them acting for all. So all the words covered. Is there a relationship between people? Yes. They have agreed to share what? Profit. From where they got the profit? Business. This business could be carried by one or all of them. Either carried on by all or any one of them acting for all. And this word acting for all, anyone, we call it to be a mutual agency. Okay, then. Persons who have entered into partnership with one another are called partners. So every person in the partnership firm is called as a partner. Correct? All the partners together, we call them to be firm. So suppose if there are three partners, A, B, C. Individually, they're called as what? Partners. And when you want to talk about all the three partners together, we don't say three partners, we say firm. So collectively, all partners are called as what? Firm. You need to understand that in case of company, you have separate legal entity. So company is different, members are different. In partnership, that doesn't work. In partnership, partnership will be the same as that of its partners. So whether you talk about all partners ABC and call it to be firm, or interchangeably, when you talk about a firm, means it is ABC. Okay, that is the meaning of it. So collectively, all partners are called as what? Firm. Okay. Person who have entered into partnership with one another are individually called as partners, and collectively they'll be called as a firm, and obviously under which name they're operating, like ABC and Company, ABC and Associates, that is called as the firm name. And under the name which they're carrying on their business is called as what? Firm name. Okay, that is the idea. Now, if you have done this definition correctly on top, that is what a partnership is: a relationship between persons who have agreed to share the profit. Profit from where? Business, which is carried on by all or any one acting for all. If you break this, you will get the features. So don't you think partnership is a relationship among the people? So there has to be an agreement. They have to share profit, second element. From the business, third element, which is carried on by all or any one of them acting for all, fourth one. That is nothing but mutual agency. Okay, so that is the idea. If you look at it, the definition of partnership contains the following 5 elements which must coexist in a partnership. So partner is an association of 2 or more persons. The partnership must be a result of an agreement. They should carry on business. They should decide to share profits. It must be carried on by all or any one of them acting for all. Okay, then. Now, if you take one by one, let's talk about association of 2 or more persons. So 2 or more persons have to come together. Okay, compulsory. So one person cannot do partnership with itself. Then one person is considered to be what? A sole proprietor. Okay, and it's a contract. So we know very well in the essential elements of valid contract, one person cannot contract with himself. So minimum 2 parties. Okay, partnership is an association of 2 or more persons. Again, only persons recognized by law can enter into agreement of partnership. What is the meaning of this? Tell me, is company identified as a person in the eyes of law? Yes. Is LLP identified as a person in the eyes of law? Yes. Similarly, is partnership firm separate person in the eyes of law? The answer is no. So the meaning of this is one company can become a partner. LLP can become a partner. But if there's a firm which has partners A, B, C, if they want to become partners, they have to actually join. So they cannot say this firm is the partner of another firm. So this firm has XYZ as partners. So if they want to join together as partners now, so it should be like A, B, C, X, Y, Z have decided what? To come into partnership. Okay, so it should be persons who are actually recognized as person in the eyes of law. So partnership firm is not recognized as a person. Okay, then. Therefore, since it is not a person recognized in the eyes of law, it cannot be a partner. Again, a minor, obviously, we have discussed in detail every time. He cannot enter into partnership. So when a partnership firm is started, can you have one partner as a minor? No, it will become void ab initio. However, after partnership has started, can you admit him? Yes, with the consent of all the partners. That too only for profits, benefits. He will not be liable. So they say, again, minor cannot be a partner in the firm, but with the consent of all the partners, you can admit him. Look at that, the word admit. Admitted means what? The firm should already be existing. So initially, in the first type of partners, never ever there is going to be a minor. Then, after that, the Partnership Act is silent about maximum number of partners. So this act does not tell you how many partners. But Companies Act 2013 discusses about partners. Okay, that means they tell if there is an association of persons, they are doing business, and if the number of people are more than 50, then you have to convert compulsory into a company, either private or public. But if you continue to keep it as a partnership, it will be considered to be illegal. So indirectly, Companies Act has told maximum number of partners in a partnership firm is how much? 50. It is 50. Okay. So that is not given in the Partnership Act, but 464 of the Companies Act will discuss about maximum numbers to be 50. Clear? Okay, then. Now comes to second element. What is second element? Agreement. Agreement is nothing but two people have to come together. In partnership, very important to understand that agreement could be oral, could be in writing. Because here, registration is not compulsory. So whether you have it oral or you have it written, if there is a discussion between the two people to start a business to share profits, we call that agreement to be what? A partnership. Okay? It may be observed that partnership must be a result of an agreement, okay, between two or more persons. There must be an agreement entered into by all the persons concerned. This element relates to voluntary contractual nature. That means if there are 5 people who want to do partnership together, 5 people should voluntarily come together and enter voluntarily into contractual obligation. Okay? Thus, the nature of partnership is voluntary and contractual. Contractual means there has to be compulsory agreement. And now you can understand the meaning of contract. It comes from an agreement only. And it should be voluntary, free consent, and contractual, that is agreement. An agreement from which relationship of partners arise may be either express. Okay, so they're telling what express means is oral or written. Okay, then it may also be implied from the act done by the partners and from a consistent course of conduct being followed. So none of you here should have a problem. You know very well 2 types of contract possible: express and implied. Implied will be depending upon course of transaction or conduct of the parties. So if suppose regularly you all are doing the business together without any discussion. So both of you go to the office, both of you are doing the business, both are doing the sales, both are dividing the profit among themselves at the end of the day. That means even if you have not discussed, the course of dealing that you're having, the conduct that you're having is as good as your what? Partners. So they're doing either act or consistent course. Regularly you're doing that. Then also it becomes what? Partnership. Okay. So it may be express or it may be implied. Showing mutual understanding between them, it may be oral or in writing. Okay, then business. I told you, you cannot have partnership for charity. Never possible. So partnership compulsory will be only for profits. Okay. In this context, we will consider 2 propositions. First, there must exist a business. For the purpose, the term business could be you do trade, you do any kind of service, you do anything in partnership, it's okay. But intention be to earn money. Okay. You do trade, occupation, profession. So you do trade, that is trading businesses could be, occupation could be any practice that you're doing, and practice a profession. Doctors also can come together and form a partnership. CAs will do partnership only. Okay. So profession also usually you'll see partnership working. The existence of the business is essential. Secondly, the motive of the business is compulsory acquisition of gains. So compulsory should be only for profits. So if you talk about NPOs, no concept. Okay, which leads to the formation of the partnership. Therefore, there can be no partnership where there is no intention to carry on business and to share the profits thereof. So if you do not have the intention to share the profit or carry on the businesses, there is no partnership. Okay, so if you look at it, no, simple discussion we are having. First, 2 or more people came together. Then they entered into agreement. Agreement could be oral, written, or implied. Implied is what? Nothing but course of dealing. That too consistent or conduct. Correct? And when you look at the other one, business compulsory. First, there has to be business and then it should be for profit. And business, we know it could be trade, it could be occupation or profession. Anything you do. And compulsory should earn profit. Okay, then. After you decide about the business, the next very important element is you have to share it. So suppose there are 3 people, okay, A, B, C, wherein all 3 have together started business. But the profit that is generated is shared only by A and B. It is not shared by whom? C. Then you can't say A, B, C are into partnership. Because compulsory, every partner should get a share. Let the share be very minimal, it's okay. But does he require to get a share? 100% yes. Okay. So that is the reason we say every partner should get the share in the profit. If the partnership deed is silent, you say equal profits. Otherwise, can you also decide how much profit? Yes. So any which way you have to decide what? Proportion. If this is missing, that will be equal. But every partner should get. Because if one partner is not getting the share of profit, simple English, he's not a partner. Okay, that is going to impact whether it is partnership or not. The sharing of profit is an essential feature of partnership. There can be no partnership where only one of the partner is entitled to the whole of the profits of the business. Because if that is the case, no, it will become sole proprietorship. And remaining all will be your employees. Partners but agree to share the profits in any manner they choose. Any manner it could be. You get into 1:1:1. You get 9:1:1. You get 12:5:4. Do anything. So ratio is not a requirement. Ratio must be there as requirement. But an agreement to share loss is not as an essential element. Usually what happens, they say whatever profit sharing ratio you have decided, if loss happens, loss also would be shared in that ratio only. So deciding profit sharing ratio is compulsory. Loss sharing is not compulsory, because loss sharing, the prima facie understanding would be the way you're going to share the profit, in the same way you're going to also share the loss. Okay, so every time that is not required to mention. Suppose some businesses say profit will share in the ratio of 12 is to 5 is to 4, but loss will share in the ratio of 1 is to 1 is to 1. Then in that case, profit means that, loss means this. But if nothing is told about loss, obviously the logic is what? How you share the profit, in the same way you share the loss. So having loss sharing ratio is not required, but having profit sharing is required. Okay? But an agreement to share loss is not essential. It is open to one or more partners to agree to share all the losses. Sometimes what happens, uh, like ABC are partners, profit all will share, but when loss comes, the working partners will tell, when loss happens, we only will take it. This is valid partnership, no problem. Point is, profit should get shared. Loss may be shared or may not be shared. Okay? However, in the event of losses, unless otherwise agreed, that is, if the contract is telling, there must be borne compulsory in PSR. So if you have not decided a separate ratio for loss, loss will be shared in PSR only. Okay, and is it compulsory every partner should bear the loss? No. Look at minor only, no? Will minor bear loss? No. But is that partnership valid then? Yes. Okay, so it could be like that. So profit sharing compulsory, loss may or may not be. Okay. Now look at that. Co-owners who share amongst themselves the rent derived from a piece of land. Okay, now there's a land, two people are owners. From the land, rental income we are generating and we are taking 50% you, 50% me. Is this partnership? The answer is no. Point is, where is business? It is only the rental income that we are sharing, and it is not coming from a business, it's coming from a land that we own together. So that is co-ownership, it is not partnership. Because what is lacking? Business. So here they say, co-owners will share rent among themselves from a piece of land, are not partners because there is no actual business. No charitable institution or club may be floated in partnership, because partnership has to be only for business, and business that too only for profit. Correct? Then X and Y buy certain bales of cotton, which they agree to sell on their joint account and to share the profits equally. So are they deciding to do business together? Are they deciding to share the profits together? If the answer is yes, that means X and Y are what? Partners. All right, then. This is, we can say, the most important part of partnership. In fact, I would say, next topic that we're going to discuss about true test of partnership. Okay, true test of partnership. The most important element will be mutual agency. The concept of mutual agency is, there are three partners A, B, C. Each partner will act in two roles. One, he will be a principal. Second, he will be an agent. One is his principal. Second, he'll be what? Agent. Principal means what he is doing, he will be responsible only. But what he is doing, he's also doing as an agent for the others. So act done by one partner will automatically blind the others. So A, what he does, A will be responsible because he's principal. And A is also acting as agent for B and C. So whatever A does, automatically B and C also will become responsible. This feature is available only in partnership. You look at sole proprietor, the concept will not exist. In company, what members does, company not responsible. What company does, member not responsible. And what one member does, other member will never be responsible. Correct? Because if I'm the shareholder of the company and you are the shareholder of the company, what I do, will I have the binding effect on you? The answer is no. LLP, partner and firm, they'll be binding each other. But one partner will not bind the other partner. So if you look at everything, you'll realize one concept, that this thing where you can bind everybody with you, including yourself, comes only in partnership. That we call it to be mutual agency. I am your agent, you are my agent. I am my principal, you are your principal also. That comes only and only in partnership. So anytime you have a slightest confusion that is this a partnership firm or any other organization, the test that you will check is what? Mutual agency. Because is agreement present in all the organizations? Like LLP also will have agreement. Is what to say, two persons coming together everywhere? Yes. Is business going to be there? Yes. Will sharing of profit also be there? Yes. But what is the unique feature of partnership which will differentiate it from others? It is mutual agency. Anyone acting for all, Okay, or all of them acting for each other. Okay. So they say the business must be carried on by all the partners or by any one or more of the partners acting for all. This is the cardinal. Cardinal means most important principle of the partnership law. In other words, there should be a binding contract of mutual agency between the partners. An act of one partner in the course of business of the firm is in fact an act of all the partners. So when A does something, it is as good as A, B, C have done together. If B does something, it is as good as A, B, C have done together. If C does something, it is A, B, C done together. So act of one partner will automatically bind all the partners. Each partner carrying on the business is a principal as well as the agent for all the other partners. So you're understanding he's playing a double role. One is acting a principal for himself. Second is acting as an agent for the other partners. He is an agent in so far as he can bind other partners by his act, and he is principal to the extent that he is bound by his own acts. So is he also bound? Yes. Are others also bound? Yes. It may be noted that the true test of partnership is mutual agency rather than sharing of profit, because in LLP also you share profit, company also profit is shared. Okay, so if you want to bring a unique characteristic to the partnership as compared to any other business, the only idea is what? Mutual agency. It is not present in any other business. Okay, then if the element of mutual agency is absent, then there will be no partnership. Okay, if we look at it, A, B, and C are partners in ABC Associates, a partnership firm. If A made certain purchases for the purpose of business, Mr. K, from Mr. K, then Mr. K can recover the money from A, B, or even C. Or even all the partners will become liable on the act behalf of the firm. So who entered the contract here? Only A. But can he recover from B? Yes. Can he recover from C? Yes. Can he recover from all A, B, C? Yes. So he can sue the firm. And firm, I told you, is not a separate legal entity. So when I say firm, means all the partners. So can he sue all the partners? Yes. Okay. Then the simple case study here, just for a quick reference. In KD Kamath and Company, the Supreme Court has held that two essential conditions to be satisfied are that there should be an agreement to share the profit as well as losses of the business. This you already know. And the business must be carried on by all or any one of them acting for all within the meaning of the definition of partnership under section 4. If you look at it in the beginning, the partnership definition which is there, it is as per section 4. Okay. So does this case study say something else or you already know? It is telling you need to have an agreement to share profits of the business carried on. It should be carried on by all or any one of them acting for all. The fact that the exclusive power and control by agreement of the parties is vested in one partner, or the further circumstance that only one partner can operate the bank account or borrow on behalf of the firm, are not destructive of the theory of partnership, provided the two essential conditions mentioned earlier are satisfied. So can you have one partner managing everything? Yes. Can he run the business? Yes. Can he operate the bank account alone? Yes. The point is, when he's doing something, he's automatically binding the others. So this is the concept of partnership. So it's not destructive in nature. That means if you're giving power only to one person, does not mean it is not partnership. The idea should be what? Do they have agreement? Yes. Are they running business? Yes. Are they sharing profit and losses? Yes. Is every partner getting bound by each of them? Yes. If that much is there, then you delegate power to one or all. Will it be partnership only? Yes. That's the idea. Okay. The partnership agreement is also known as partnership deed. So if this agreement is in writing, no, under stamp paper, that same agreement we call it to be partnership deed. Okay. All right. Now the next discussion is even more simpler. Again, they have repeated the same thing. So in exam, you have essential elements of partnership. You have to give 5. And if they ask you to give true test of partnership, you have to give 3. Actually speaking, true test of partnership is only one. That is mutual agency. But in your books, what is covered is agreement, share of profit, and mutual agency. All 3 are considered to be true test of partnership. Okay. So you have to write all the 3 there. Now, what is the meaning of true test? That means, is it a partnership or not? If you want to say yes, then 3 things have to be present. 1, agreement. Second, share of profit. And third is mutual agency. Out of which, actually speaking, mutual agency itself is what? The cardinal principle. Okay. Now, mode of determining existence of partnership. In determining whether a group of person is or is not a firm, or whether a person is or not a partner in the firm, regard shall be given to the real relationship between the partners, also known as all the relevant facts taken together. That is nothing but true test. So look at that. Agreement, share of profits, and carried on by all or any one of them acting for all. So there should be an agreement between all the persons concerned. If all the persons are a part of agreement, means it is a partnership and those are partners. If all of them are sharing profit, means they're partners and everybody connected there is what? Sorry, there's a firm and everybody connected is a partner. If one is acting in 2 capacities, one as a principal for himself and one as the agent for others, then for whom all he is acting, all will be considered to be what? Partners. And they're together calling a firm. Now, what is agreement? Again, same thing they have told here. Partnership is created by agreement and not by status. What do you mean by this? Listen to this carefully. If you look at Hindu undivided family, a joint Hindu family business, okay? Basically, there what happens is, if you take birth in that family, the moment you take birth, you are the member of the HUF. So tell me here, after your birth, did you enter into agreement and you became a member of HUF? Or because you were born in that family, you became member? The idea is, because you took birth, you became member. So if you understand HUF, a joint Hindu family business come together, where everybody of the family members are part of the business also. Part of the business as they'll not take part in the running and all. Main will be the karta, all will be the co-partners. Okay? And the business will be a family business together, where everybody is getting benefit out of it. But here what happens, the moment you take birth, there is a kid born in the family, the kid is a part of HUF. This you became a part of HUF because you took birth in that family. It happened because of your status. But partnership is not like that. Suppose there are 3 partners, X, Y, Z. If X has a son, that son will not become a partner in XYZ only because he is the son. So if he wants to become the partner, like for example, if X, Y, and Z are running partnership and X has a son A, because he's son of X does not mean he's a partner here. If he wants to become a partner, there has to be a fresh agreement between whom? A, X, Y, and Z. So partnership is a result of agreement, not a status. Status means where? Like HUF. Because you're born, you are a part of it. Okay? Partnership is created by agreement and not by status. Okay? The relation of partners arise from contract and not from the status. And in particular, the members of HUF carrying on family business as such, or a Burmese Buddhist husband and wife carrying on business are such not partners in such business. So Burmese Buddhist husband and wife is nothing but a culture wherein they're telling husband and wife come together and they start a business. But here, they're doing it together because they became husband and wife. Okay, so that is happening by a status. It is not happening because they have entered into agreement. So here it is status-wise. Okay, because they're husband and wife. Okay, it is happening like that. Or because you're a member of the HUF, you have a part in the profits. Okay, so these 2 are the examples for what? Status. But partnership is only by agreement, contract. It cannot happen otherwise. Okay. Sharing of profits we already discussed. But now we have one important 4 marks theory question. Okay. They're telling there are some people with whom you share profit. You're sharing what? Profit. Even then, these are not considered to be what? Partners. Okay, I'll make you understand very simple manner. First of all, with everyone whom you share, the profit is considered to be the partner. That's the true test we are finding. So what they're telling is, The sharing of profit or of gross returns arising from a property by persons holding it in joint or common interest in that property does not by itself make such person a partner. Meaning is, we discussed an example of land. Two people are there, A and B, jointly holding the land. So when the rental income comes, or when you sell this land, both will get part of it. Both will get the profit of it. Yes. These are not called partners. They are not called partners. Because only if you're owning a property together, only if you're jointly owning a land together, and you're either receiving any income in form of that, and you share that, that makes you co-owner. That does not make you a partnership. Okay? Then what is this? The receipt by a person of the share of profits of a business or of a payment contingent upon earning of profits or varying with the profits earned by the business does not itself make him a partner with the person carrying on the business. And in particular, the receipt of such share of payment. Meaning is we are telling every person who's going to share the profit is going to be the partner. But is it going to happen every time like that? No. Idea is an employee gets a salary. So he's also receiving money from the business. He's also getting a part of the earnings only, part of the profits only. But then, is he going to be called as a partner here? No. Agent of the partnership. How much ever sale he's making, it is varying upon that sale, his commission is changing. Commission is getting from where? Profit only. So will you call him to be what? A partner? No. So the point is, if suppose a partner dies, okay, he's left behind with his family, LR. So what happens if you're not able to pay the money in one go? Then you decide to pay him annually. Okay, that means for continuously 5-6 years, we'll pay you so much amount. Now, these people are also going to be receipt of money of the profits of partnership. So will they become partners? No. So every time a receipt of money by a person from the partnership will not entitle him to be a partner. When he'll become a partner, when you're actually carrying on the business together and the profit of the business you're actually getting. Okay, that is the idea. So now when you go to take a loan from the bank, you are required to repay the bank with principal and interest. From where is this interest and principal coming? From your business profits only. Correct? So because you are sharing a part of your profit to the bank for the repayment of loan, now the banker become your partner? The idea is no. They're telling by a lender of money to person engaged or about to engage in any business. Okay, so if a partnership firm goes to a bank and take loan, then when you're repaying back, you're sharing the profit to them. Do they become partners to you? No. A servant or agent as remuneration. Servant here you have to understand as employee. So employee also will get salary from where? Profits only. Agent will get from where? Sales only. So basically gross returns are telling, no? Sales. Correct? So will they be called as partners? No. By a widow or child of a deceased partner. So partner dies, he is left with his LR. These people have to receive money, right? So they're getting from where? Profits. So will these people become partners? No. Correct? Then by a previous owner or part owner of the business as a consideration for sale of goodwill or share thereof does not itself make the receiver of a partner with the person carrying on the business. What is the meaning of this? Share of goodwill means maybe there is a person, Mr. Y, he's having a very successful business, but his intention is okay, there is some glitch in the system. So immediately I'm recording the next one. Okay, for the continuity of this, we'll stop this particular video here, and the continuity will be from the next video. Okay, it'll be from the same place where we are stopping this. Okay.